This is the ordinary level 2018 cash budget question. So on the left hand side of the screen you can see the question itself, right hand side you can see the solution. Okay, so what information are we given? We're given the following assets and liabilities and capital on the first of the first day of the year. So there's your assets, there's your liabilities. These are the expected sales and purchases for the next 5 months. So sales and then purchases underneath, so you can see for the various months and a total as well. Okay, so we're provided with some additional information along with that as well. So all sales on credit and paid for 1 month after sale. Purchases, we're told about rent, equipment, wages, closing stock and net profit. So part A, we were asked to prepare a cash budget showing the expected monthly receipts and payments for 5 months, January to May, and also the total column. Okay, so we get started on that first of all. So you can see my cash budget here. I have my receipts, January, February, March, April, May, the 5 months, including a total column as it was asked for in the question. So the first entry on the receipts is debtors. So obviously debtors are people who owe us money. And as we can see from the question, all sales are on credit and are paid for 1 month after sale. Okay, so 1 month after sale. So how do we figure out how much is going to be paid in January? Well, we're going to have to look at December. Okay, so you can see December is not here. So where do we get it from? Well, we get it from our assets. They're called debtors, people who owe us money. So in December, 82,100 euros worth of goods were sold on credit. So that 82,100 euro we're going to get in January. Okay, so that's why that's highlighted in yellow. Okay, so you always get the first month under assets, under debtors. Okay, so where do we get the figure for February? Well, we're going to have to look at January, 44,200. Why? Because we were paid 1 month after sale. So in order to get what February's was, we look at January. Okay, March is 89, get it from February. April's 88, get it from March. May is 57, get it from April. Okay, so remember the examiner just wanted us to do 5 months. We've done that and we total them across and we just total down. So very straightforward. That's our total receipts done. Okay, our next is payments. Okay, so we have to see what it says about purchases. So in the question it says all purchases are on credit and are paid for 1 month after the month of purchase. So again, just like sales with 1 month, purchase are 1 month after the month of purchase. Okay, with the exception of April. And I'll show you that one in a second. Okay, so we're going to have to get the first month, January. So where do we get that from? Well, we look at liabilities, we look at creditors. Remember, creditors are people who we owe money to. So we bought stuff in December to the value of 50,300. That has to be paid for 1 month later. So that December purchase is going to be paid for in January. Okay, so that's when I got my 50,300. Okay, in order to get February, I look at January. March is 48, got it in February. Okay, April is slightly different. Why? Let's have a look at the question. Accept 28,000 for cash in April. So we made purchases in April for cash 28. So how do we do this then? So we've just done it down here so you can see. Now you don't need to present this to the examiner, it's just for your information. So April, so we look at a March figure first of all. So March figure is 42,300. And we're going to add on 28,000. Why? Because we paid for it in cash. So March plus 28. So March is 42,300 plus the 28 gives us 70,300. So that's where I got that figure from. Okay, the May figure then, 67. So where does that come from? Well, if you think about it, we get our April figure, which is 37,400. This time, instead of adding 28, we subtract. Why do we subtract? Well, the reason being, in April we paid 28,000 in cash for our purchases. So we take that away. Okay, so it's already paid for, 67. Okay, do the same thing as always, we total across. Okay, wages. So let's have a look at our information that we have for wages. So wages are per month will be 16,400. So 16,400 the whole way across. Again, I just added them. Next one is equipment. So equipment will be brought in March for €6,000. So equipment, go to March, 6,000. All the other months are blank. Remember, put in the total column. Rent. Jack rents the premises for 42,000 per annum. Per annum means per year, payable monthly. So it's 42,000 for the year, payable monthly. There's 12 months in a year. 42,000 divided by 12 gives me 3,500. So each month 3,500. So then total it up. Okay, the next is getting our net cash, and it's pretty straightforward. So in January, total receipts 82,100, total payments 70,200. If I take those two away, it gives me my net cash to be 11,900. Okay, so next, tell you what, I'll do the net cash for all the months here. So in February, 44,000 receipts, 68 in payments. So you can see that's a minus 23,800. March, 89,400 minus 74, which gives you 15. 88,000 minus 90. So you can see again a minus 2,100. So 57,900 minus 26 gives you 31. And do the same thing in the total column. 361 minus 329 gives you 32,600. Okay, the next one is our opening cash in the first month. Okay, so sometimes students are a little caught out on this one, but it's straightforward enough. So opening cash. So the first day of the first month, so the first day of January, how much cash do you open with? Well, if you go to your assets, look at cash, 31,200. That's the figure there. Okay, so how do we get our closing cash? Very simple. Get our net cash plus our opening cash, and it gives you a closing cash. So I added my 11,900, 31,200, and it gives me 43,100 euro. Okay, so on the last day of January, you had 43,100 euro. You wake up, it's the first day of February, you're going to open with the same amount of money, 43,100 euro. Do the same thing again, add these two figures together. So it's going to be 43,100 minus the 23,800, which gives me 19,300. Same thing, on the last day of February, you close with 19,300. We get up, it's the first day of March, we open with the same amount of money. Again, we're adding these two figures together, they're both positive numbers, so that's good, 34,600. Closing cash in March becomes our opening cash in April. This time it's 34,600 minus 2,100, see that's a minus figure, it gives you 32,500. Again, closing cash in April, 32,500. Opening cash in May, 32,500 as well. Again, we add these two, both positive numbers, 63,800. Do the same thing in, slightly different in the final column, my apologies. You'll notice that the opening cash here is the same as the opening cash in the first month. Okay, so that's always going to be the same figure. So wherever you have figure you have in the first month, it's going to be the same in a total column. So be very mindful of that. Okay, so we add those two figures together and it gives you 63,800. Now you'll notice these two figures are the same. If you get those two figures to be same, it's a very good indication that you've done the question properly. Okay. What I would suggest is just say these figures are right by 6,000 euro. What I would do is I go back through my question. I'd try and find some entry for the value of 6,000 euro. And in this case, it would have been equipment, 6,000 euros. So maybe you just made an error and left that out. Okay, so there's just a little tip. In part B, we have to do our balance sheet. So our first heading is fixed assets. So fixed assets here in the question, you will see the top fixed assets, 305,000. But remember in the question that they may purchased equipment. So equipment was purchased to the value of 6,000 euros. So what you're going to have to do is your 305,000 plus your 6,000 gives you 311. Again, there's no need to write that there. It's just for your information. The next one is current assets. First entry here is closing stock. Okay, where do we get our closing stock from? Given to us in the question down the bottom, 29,100 euro. Our next one is debtors. So where do we get that from? Our May sales. So if you have a look at May sales, it's 81,600. So why is that a current asset? Well, those sales that we made in May, we're going to get in June. Okay, so that's why they're current asset. We're going to get 81,600 in June. It's 81.6. Our next one is cash. So where do we get that from? See May's closing cash. Okay, so we'll go back up. See closing cash in May. See, this is the month of May. Closing cash, 63,800 euros. So that's where we get that figure from. Okay, we total it 3 and it gives us 174,500. Next we have current liabilities and we have creditors. So same thing, we see May's purchases. So you can see it's 34,500 euro. Again, why? Because remember, purchases paid for 1 month or after the month of purchase. So that's why we use that figure. Again, we just bring the figure across. To get our working capital, it's very simple. We take our 34,500 away from the 174,500 and it gives us 140,000. Again, that's just for your information here. No need to write down your exam. Okay, our net worth. We take the 140 away from the 311 and it gives us 451,700. So 451,000, sorry. And then finance by capital, told that in the question. Capital, 400,000. And then our net profit. Okay, so where do we get net profit from? Well, we're told in addition information. Our net profit, 51,000. 51. So we add those two together, and you'll notice again that these two figures match. So that's 451, and the same with this figure here. So again, if those two figures are the same, very good indication that you've done the question correctly. Okay, so there's a bit of theory as well. So we look at this in part C. It says 2 benefits of preparing a cash flow budget. Okay, so you can read through those and pause the video. But that essentially is the 2018 cash budget for ordinary level.